Hi friends, let's take a look at Link versus Bitcoin and Link versus Dollarcoin. If I were to dive over to the comments, I would see that somebody left me one telling me that I need to clean up the charts. Basically, that's what they were saying, or at least that's my response to it. Let me just take off the haven't responded to. By the way, big shout out to Kevin, thoughts with you, by the way, buddy, really do appreciate you coming back and having a chat with us here, even though you don't need to. But anyway, Paul Myrick says, charts are a mess, hair is on point. Thanks very much, buddy. Always appreciate the compliments about hair, of course, but the charts are a mess. So what I'm going to do in this episode is take a second to clean them up just a smidgen. But before I do that, actually, I'm not going to clean them all that much up here. Clean up this, right? What I'm going to do, I'll clean up that. I'll remove that line and I'll remove that line. I'll remove these two as well. In fact, it's cool, because we've done that. Look at these. We've done them. We've achieved all of that. And I'm going to leave this pitchfork on here. I'm going to leave the EMAs on there. I'm going to leave this Fibonacci on there, and that's what I'll talk about with regards to Bitcoin. To Link pairing, the Link to Bitcoin pairing, before moving on to the dollar one. Okay, so we have an inside pitchfork here. Is that what this is? Let me just double check that. Indeed, an inside pitchfork. And so far, that's given us up some ideas about the pricing. You might be interested in what this looks like if it was, for instance, one of these ones. If it was a modified shift, then we've come right in at the very, very bottom of this, and we could be breaking out of it soon. And then that would be, of course, that thing useless in that sense. The shift pitchfork itself, we've seen that it's been resisted at the median line on this one. It really, I think that instead of just sticking to one or the other, that you're probably better off looking at the differences between them all. Of course, your man himself that came up with it, Andrews, probably wants you to stick on just that one. And then his student, the Plato to Socrates type mismatch, Schiff, probably wants you to stick on that one. But I like to look across the board and see where we are. Let's leave it on this for now, shall we? And say that if prices move down below this 123 area, the 123,000 Satoshi level, then things are obviously quite bad. We're at the 382 at the minute, perfect target if you did want to look for a turnaround, perhaps off the back of this, with having moved past the 236 in terms of your most bullish aspect, in terms of moving past the 236, coming in here, getting this a turnaround at the 382 would be the sort of your shallowest retrace that you could go on to next before continuing the upward trend. That'd be totally fine. Or you could be looking down towards lower targets, in which case you're looking down to that 50% at 116 or the 618 at 100 at 100k itself. If I switch over to the modified shift, you can see that we're almost busting out of that. So that 382 operating as support, with the 21 EMA operating as support, at the bottom of the pitchfork operating as support, all ties together to give you a pretty decent story if we did move towards the top side. Sure. In terms of the inside pitchfork, though, we have a lot of scope for discussion towards the downside, and it comes in and it kind of lines up with, if we see this happening over the period of the next 12 days, then what you're looking at is potentially a retrace down towards the 618 zone of the 103k, and the 21 EMA is in there. It's actually just going flat at the minute, really, in terms of its slope, or it's flattening out anyway. I want to see this obviously respected in terms of support, but if it isn't, then I'm looking down towards the lower sides. Of course, that coincides with nice confidence with that 382, and as well the modified, this inside pitchfork giving us this median line, which tells us, on the downward sloping aspect of things, where we're currently finding resistance at, and it's bang on there at the minute. So that's what I'm looking for. If we can move up above the 134k area, and we're not too far away from it, then perhaps, we're going to see some positivity come back into the market. Let's look at how this has panned out. We got the measured move of our symmetrical triangle that we drew in on RSI. So go ahead and remove that mess. I hope you're liking what you're seeing here, Mr. Myrick. And some of these other lines, and that's kind of positioning us where we are. But what do we have here as well is there's the potential for head and shoulders here on the RSI. Let me just take out the brush here, and hopefully you can forgive me as I put a bit of mess back on here, and say that this is what we're looking at in terms of this thing. If this moves towards the downside, then very much could bring us back down here towards this area, where you could have a target that almost looked like a heart for a second in it around about the bearish control zone. Of course, that could see these targets on the price action coming down as far as this area, if that were to be the case. But let's look on down the way, though, at the 4-hour time frame, and bear in mind then that we have a couple of different aspects: a low, high, lower, high, higher, low. Sorry, let's start again. Right, low, high, higher, low, higher, high. Made it. And during that period, We did it without bearish divergence mostly, although there was, of course, some bearish divergence within the structure here at the highs itself. Then we've come towards the downside, and let's see here, we've got lows, 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 and then there's this kind of rounding off here as we put in this area. So, you could see lots of reasons why you could see this operate as support for us to then go back up towards the top side. Lots of resistance areas that we've already identified if we were to go up towards the top side, including the 236 itself, of course, at 144, and then the upper line here of this thing, and the upper side target of this if we were to sort of remain in terms of putting in what would ultimately turn out to be a lower high, which is how this is sort of the psychology this thing's going to work out for us if we did go up towards the top side and not break past it, would be 162. And those are the sort of key profit taking zones, regardless of where we go, if you're actually trading this and looking to not be too greedy on it. The downside targets we already spoke about in severe detail. We're down below the 50 simple moving average here on the 4-hour time frame. We're above the 200 and the 233 exponential. Flicking up towards the 24-hour time frame, though, you can see that it's the 21 EMA that I'm looking to. And of course, this 55 exponential and the 50. This looks a little bit like a snowman, perhaps sat on a mound of snow. Let me just give him an eye. Give him a wee bit of. I can't really draw because I don't have a very good mouse. There's our snowman. Let's give him that stick arms. Okay, snowman on. Let's give him a top hat. Sorry, this is all for you. That's not top hat. It's more of a Stetson. That's cool. This is all for you, my friend Paul Myrick. I hope you like that. Right, cool. Nice one. Going over to the dollar pricing, where we will need to clean up again. Thanks for that reminder, matey. By the way, the reason why this is so messy, I'm acting like I'm actually not. Sorry, that's all just for fun. The reason why all this mess is still on here, by the way, was to remind people like where we've come from and the analysis that's led to all this. We talked about head and shoulders here, and also as part of a descending triangle. And when it failed and we got the breakout move and past the fake out territory of it in this zone here, we moved up towards the as a proper breakout up towards the top hand side of the side of this thing. Then we went into a rising wedge there where we had the full measured breakout move there. It's the downside of that one. Then what we saw is a symmetrical triangle on the go where we got the perfect measured move off the back of that one. Then we had this descending broadening wedge, which then led to this perfect measured move off the back of that one, bringing us in perfectly to here where we've got yet another potential for a descending broadening wedge, although it's a little bit kind of tasty looking at that, a bit too much at that point. Go down to the 1 hour time frame and you can see how that works together. Okay, a lot of mess on here, but as you can see, it's all gone along perfectly, right? So there's been a pretty good schooling for people on that front, right, so far. In fact, we've also got a few other things here which are also looking perfect, like how this yellow, I left the yellow channel on here. I hope you can see that in amongst this mess, mate. On here in the background, right? Left that on there. And the reason why I left that on there was because it was obviously offering up a significant zone towards the downside should we break out of it. And right here, as we saw happened, and that has done, as we come in here, right bang on what is indeed a Fibonacci retracement point of the golden pocket. Okay, so everything's tying together here. And if you were to be, kind of watching along, subscribe to the channel and everything else, all of that would have been kind of revealing itself to you over time and you wouldn't be annoyed about it. But just because you asked, let's do it. Let's do it. I mean, people are going to be like, no, Rocky, don't do it. Don't do it. Where is it here? Don't do it, Rocky. These drawings are too good. Ignore what Paul Myrick says. Well, screw it. There you go, mate. Nice and clean. Back in action here, and let's see where we could be going. Of course, bear in mind that we actually have come into a 618 Fibonacci retracement zone there now. Let's take a look at, though. Oh my God, where have they gone? I want to bring them back, Rocky. Bring them back. Bring them back. Bring them back. All the drawings, bring them back. I can't bring them back. Well, I can't. But I'm not going to because he wants them to be gone. Fair enough. Right? I understand. Fair enough. Let's do a Fibonacci. Let's do a speculative one and say, imagine this was the low after that high. Imagine it. And where we could be going next then. And this makes it easy for you to see how you could. And as well, Paul, I do absolutely sympathize with people who, look at a chart and think, how am I going to be able to construct all this information out there and be able to hit my own home runs? And that's what this channel is all about, is to try and enable you as a trader to be that independent, self-reliant, resilient trader. So, I appreciate that, but I want you to be able to see that there's a good process you can go through. And let's do it together in terms of like building up a chart and a picture for yourself, right? And here's one aspect of looking at it just real quick. wick. And here's a Fibonacci. You draw them in left to right, okay? And I'm going wick to wick on this. You only ever do wick to wick or body to body, never a mixture. So in the way that I look at that in terms of a rule really is that if there isn't a wick towards the downside, then I would do it body to body. But generally speaking, I actually like to do wick to wick is my preference. I lean towards them. Lovely little lessons for people here. The key area to look to, of course, the 236 where we've come up above. And as long as we're above this, then you could be kind of from a Fibonacci perspective, bullish on the price action, looking towards targets such as this 618 in here. But we have already struck that. We've struck gold on that sense already so far, and perhaps, you know, maybe we've come and done all what we're going to do in terms of the upside movement. Okay, so we have already hit that, so that's something to bear in mind. But yet we still remain above the 236. In which case, I like to also look towards the yellow line here. This yellow, solid yellow line is the 21 exponential moving average. That's what this yellow one is. The green one is the 55. The blue here is the 144, and the pink is the 233. That's what I use. Don't ask me why. This episode is already long enough as it is. But here's the 50 simple, that's red dotted line, and here's the 200 simple with that white dotted line. Excuse me, I'll just clean that up real quick. And we left a bit on there. That's better. Okay. Now this is what you could also do is suppose, because this is a 24-hour time frame, is dive on down to the 4-hour time frame and say, look, just so that we can have a bit more sort of room to maneuver on the charts. You could also look at this and say, well, that's this zone here that we're doing it from in terms of our targets. In terms of our targets, going from this high down to this low here, and that's the 236, and we hit this golden pocket zone in here already. Let's just do this again towards the top side, you know, just do it again, going wick again to wick, and I'll stretch it over the price action so you can see where we are in relation to it. And what have we done in reverse? Well, if you were to make the case against sort of counteracting that we've hit the 618 case here, you could also say that we've hit the 618 over here on this one, and we're being supported by the 144 here on the 4-hour time frame, having already achieved what we had to, coming in and retesting the 200 simple after having had a golden cross on the 4-hour time frame all the way back over, somewhere back over there. And as you can see, we often come in and retest these things in terms of pullbacks. And this has had a test of the 200 simple over here, had a test of the 200 simple over here, had a test of the 200 simple over here after the cross, right? So there's one test of it, 2-3 tests of it, and now we've got the 4th test of it there, having not had one for quite a while. Maybe that was a healthy and necessary pullback, right? You could do that if you wanted to. That's totally fine. You could also look down here and say we maybe had a head and shoulders type effort here on the RSI, or perhaps we swung failure, depending on what language you speak. Maybe here on this one, having gone past the neutral line on this and you know failed on that regard. You could also look towards this and say, well, hey, this is an upward trend. If this turns out to be our low at any given time, of course, you could have said the same thing back here. But if this turns out to be our low, then this would be hidden bullish divergence. Looking at this area over here where we had a low, then followed by a high, followed by a higher low, followed by a higher high, which were also not really divergent. And I say not really. Why is that? Well, it's because there's that touch of divergence right there at the toppy tops. Pretty sure we already covered some of that already earlier on. Looking at this here, in terms of do I want to then capitalize in terms of, you know, really getting in on shorts on Link necessarily? Well, you could say, well, actually we're in a no trade zone with regards to the ADX being below 20, but as you can see, it is rising up towards that 20 zone. And I would like to see if you were wanting to short this, and of course I don't have a bias in the market myself, then I would like to see this ADX rising up here, turning blue, signifying that it's above 20 on the code here. If you want this code, you can join the Discord. I've got it there for people, and you can add it to your own charts. And it's much better than the average DMI. You know, the one that's out of the box one is much better. And we're up here at the 30 area for the DM negatives come up here. Now, of course, it's expanded towards the top side faster than the DM positive has gone towards the downside here. Maybe we're going to see these cross over again in the future if there were to be a positive case scenario with the DM positive going up above 20 again as a result of the movements towards the top side of the negative case. Now, that's obviously a little bit hopium-tastic in terms of presenting it like that, but that is one way that this could all break down for you if that were to be the case. But actually, you know, looking at movements down past the 618 and whatnot over here on this one and going past the 236 and invalidating validating that Fibonacci could see us coming in and perhaps putting in what could ultimately be a lower low compared to these ones over here. But even if we didn't, right, and you still want to remain bullish on it, which is totally fine, then you could be looking down towards here and saying, well, we could come in actually like we see with this wick and whatnot, and come in with a proper test of the 200 simple and still ultimately put in what would be a higher low overall compared to these previous lows over here on the chart. So you see how that all ties together for you with a bit of a story. That's just 2 Fibonacci's. We're not using any patterns or anything else with it for us at the minute. Let's take a look then at this and say, is this got anything on the go of note? Well, this is a low as part of a downward trend here. This is a 12-hour time frame. This is your high, this is your low, this is your lower high, and this is a lower low currently. And what do we have here? Well, we have these lows here, these lows, this high, and this one low. So we only have these 2 zones here on the MACD. Don't have really enough to compare in that zone. Let's just drop down to the 4-hour time frame. Is there anything on the go here? Well, there's perhaps, if this were to be a high. No, this isn't looking like there's any sort of wedginess showing up here in terms of the histogram aspect of things. And instead, maybe we're actually operating inside of a parallel channel, perhaps, for instance, at the minute. This is obviously speculative because all of these things really are, but what we're talking about is managing risk, and we're down below the median line of this thing, having had the wick of it come in today with that $16.35 price point for us in today's price action. Oops, sorry, that's the wrong candle I'm looking at there. Up here and on that one. For today, go down to the 4-hour time frame again. Sorry, excuse me for getting the time wrong there on that one. But what you see here as well is the downward slope on the 21 EMA, and it's coming in with the potential to cross over that. That'd be quite bearish if you're looking to add up your pros and cons here on this thing. Staying above this line overall is going to be what's kind of needs to happen. That ties together with the lows that we talked about previously, and of course, then at some point, perhaps maybe if you were to look at this, you could be saying, so long as we're staying above these lows, really, so long as we're staying above $14.40, that perhaps we're putting in some hidden bullish divergence as an overall upward trend signifier for continuation towards the top side. Else we ain't, baby, and maybe we'd be going down. So that's what you think, the sort of thing that you got to look to. I'm going to tune out for today. Actually, and if you get disappointed that I haven't spoon-fed you your exact targets and everything else, then just bear in mind that I had those targets on there, which were a mess, thanks to Paul. I realized, of course, that the charts are a mess. Lol, by the way, mate, I'm not taking the piss. I'm just having a laugh. I'm not taking the piss out of you. I'm not. I want everybody to go in there and give him a load of hearts and thumbs up and everything so he knows he's a great guy. Who cares? Oh, that guy, look, he's going to tell me how to get more views. Interesting. 3 reasons I'm not getting views. Well, I can tell you, it's not because my videos are lacking in amazing crystal ball-esque accuracy when it comes to technical analysis. And also, like I showed you at the start there of the show, and I was deleting all that crap off the charts, and it was a mess. It totally was. It was a ridiculous, horrible, stinking mess. That's what's been going on here. We've kind of, done it painting by numbers for everybody. So, and I've done that the whole way along since doing Chainlink. And I think you're right, mate. I think you're right. I shouldn't be spoon feeding everybody the exact thing that they should be looking for overall. For instance, here on this particular chart, we have the 382 where we come in with on this one, and we touched the 200 simple and everything else. I shouldn't go on to explain any more about how this could potentially work in terms of being a confirmation line for us or anything else, and in terms of how this could work in terms of the dynamics between Fibonacci's having moved past the 236 down to 382, how that would look if I drew one towards the top side. And I shouldn't draw that narrative out for everybody or anything like that either. And I shouldn't talk about swing failure points here on this thing any more than I already have in today's episode, because you're totally right. I shouldn't spoon feed everybody, because what it does is it creates a mess on the charts. And what people want is clean, nice charts. And that's what you get here on this channel, nice and clean charts. So I sound so passive aggressive. I really don't care. What I want to see happen is the price is moving above $17 over here and actually giving you something else to look at. And if you want to go down, then we're looking at the previous lows over there at $13.79. And I've already drawn out plenty of areas for us to be aware of. For instance, that $11 area, and there's another one down there at $8.50 that I've spoken about numerous times, but I've deleted that off the charts because Paul was right. Too much of a mess. Catch you next time. I hope you enjoyed the passive aggressive episode. I hope you hit like, I hope you subscribe, really do. I hope you see the value that I'm putting out on a daily basis. I mean, it is shockingly good, and and I hope that you're able to use it to your trading advantage. Let's look at the 50 simple here on the 4-hour time frame as an easy one. It's coming in right here at the same point. Look at that confluence of moving averages right here. We need to see things are going to look bearish or else they're going to look bullish depending on how these next candles span out over there on that one. Then, of course, whatever, I've explained it. I have spoon-fed it to people. Going to tune out now. The episode's gone on for too long. Definitely too long. Catch you next time. Thanks so much for tuning in. Really do appreciate it. See you next time. Nice and clean charts.